XRP just hit extreme oversold levels we haven't seen in months, and the AI models are screaming something very interesting. Let's break it down. Here's where we are right now. XRP is trading at $1.0966, down 3.64% in the last 24 hours. Now, I know that doesn't sound catastrophic, but here's the thing. When you look at where we've come from, XRP is sitting 31% below its 200-day moving average. That's pretty intense correction territory, folks. The trading volume is actually quite healthy at 262 million XRP, so people are definitely paying attention to these prices. Here's why this number matters so much right now. The RSI, that's our oversold indicator, is sitting at 20.32. Anything below 30 is considered oversold, but 20? That's extreme territory. You know what I've noticed over the years? When RSI drops this low, we usually see some kind of bounce. The MACD is still bearish at negative 0.0568, so we're not out of the woods yet, but, well, the Bollinger Bands are telling us we're hugging that lower support line. Sometimes the market just needs to take a breather. So what actually moved the market today? The big story is that NASDAQ fell about 5% after Friday's jobs report, and that created ripples everywhere. Bitcoin ETFs saw their 10th straight day of outflows, with $125 million leaving the building. Here's the thing about XRP. It's showing negative correlation with traditional markets right now. When the NASDAQ sneezes, XRP catches a cold. The correlation numbers show negative 0.47 with the S&P 500, which means when stocks go down, XRP tends to follow. On the regulatory front, there's some interesting movement happening. The crypto industry is gearing up for tax policy battles as the Clarity Act moves through Congress. BlackRock just filed their third amendment for a Bitcoin Premium Income ETF. Now, there's no direct XRP news here, but these regulatory developments usually create waves across the entire crypto space. If this passes, here's what happens. More institutional clarity could benefit all major cryptocurrencies, including XRP. The mood right now is, well, pretty grim, honestly. The Fear and Greed Index dropped to 12, which is extreme fear territory. XRP search trends are at 35, showing relatively low interest compared to historical levels. But you know what I've learned? Sometimes extreme fear is actually a contrarian signal. When everyone's running for the exits, that's often when the smart money starts quietly accumulating. The big players are doing something interesting right now. We're seeing over 1 trillion XRP moving in whale transactions. That's nearly 100% of today's volume. Now this is interesting. When whales move this much XRP during a price drop, they're either panic selling or, and this is the key part, repositioning for something bigger. With 1,029 large transactions happening, the institutional players are definitely active. In plain English, we're at a critical stage right now. The Elliott Wave analysis puts us in corrective phase C, and the Wyckoff method suggests we're in what they call the markdown phase. Sounds scary, but here's what that actually means. We're likely in the early stages of a decline, but this is also typically where bottoms start forming. Think of it as the market cleaning house before the next move up. So what does the AI think? This is where it gets really interesting. The AI models are showing a 98.1% probability of upward movement in the short term, targeting $1.3640. Wait, that's a 98% confidence level. For the 7-day outlook, we're looking at $1.7586 with 62% upward probability. And the 30-day prediction shows $1.8906 with over 80% upward probability. Now, I'm not an expert, I'm just looking at what the AI data is telling us, but those are some pretty compelling numbers. But here's what could go wrong. First, those ETF outflows are real. $52.1 million flowing out of XRP ETF shows institutions are still nervous. Second, this macro environment is pretty shaky. When traditional markets are volatile like this, crypto can get dragged down further. The whale activity we talked about could swing either direction, creating more volatility than we'd like. Here's my take on all this data. I'm leaning toward gradual accumulation, but with serious caution. The technical setup screams oversold bounce, and that AI confidence level is hard to ignore. For entry points, I'd be looking at the $1.05 to $1.08 range for the first position, with a secondary entry around 95 cents to $1 if we drop further. Stop loss would be 90 cents, because below that, the whole thesis breaks down. First target, $1.35 to $1.40. Second target, $1.75 to $1.80. But please, only use money you can afford to lose, and consider dollar cost averaging instead of going all in at once. That's it for today. Remember, this is just AI data analysis, not financial advice. Do your own research and never invest more than you can afford to lose. If this helped you understand what's happening with XRP right now, hit that subscribe button and give it a like. See you next time.